Hi guys, welcome back. So, these few days the market is growing like there is nothing going on in the world, and the Russia and Ukraine war is ending tomorrow. But on the other hand, it is one of the reasons why it can grow so much, because of this war, a lot of the capital had flown out of the European market and emerging market like China and Taiwan, for example, and move it into the US and most directly the stock market. That's why I think this rally up, it has a lot to do with the extra capital flown into the US stock market. A proof is just that you can take a look at the US dollar index. Since it had a breakout with this war, it never gone back down and have been consolidating up high. This is showing that the dollar is still quite strong and money is still moving out of the emerging market, which makes sense because you see the result of the Chinese market and Hong Kong market like HSI crashing, right? So ever since the bottom of 182 for HSI, it had rebounded for 1.5 weeks. If we connect the top to bottom from 25,000 to 18,000, we can see that clearly. It passed first the 61.8%, around 208, past the 50%, and yesterday just touched the 38%. That would be more like the upper limit if it should still be considered a rebound, because if it passed this level, usually it would mean a V-shaped recovery, right? That would be challenging, which means it would challenge the 25,000 level again. But I think a lot of people treat this as a rebound, so most likely around 216 and 224 people have been taking profit already. So within this a week and a half, I think people just have been gradually taking profit, and maybe around the 224 level had built up some short position and see it make a second leg downwards. So that would create some selling pressure. That's why we have been seeing some pullback. So definitely keep an eye on the 38%, which is 224 level. And the day before it reached the 224 level exactly and got rejected. Usually the first time trial it would get rejected, because that was the day I made the video on Tuesday when I pointed out that WNW, the penny stock, suddenly spiked up, which usually would indicate a pullback signal if not a dipping harder signal, right? Because it was reaching 224 on Wednesday in the Hong Kong market, but on Tuesday in the Hang Seng Index futures, it was already at around this level. So this rebound, I think, is stronger than most people expected, judging from how fast and how much it fell, right? In a few days, it had filled up 2 gap down from before. So right now, if it keeps going up, I would rather think it's not very healthy. What's healthier run up or recovery, I would say, is for it to pull back down to this range between 216 to 208. So the medium line is 211, the low of COVID crash. If it can make a second leg that's higher low and get supported and get back up, I would consider this more a healthy recovery. But if it doesn't, and it makes a V-shaped recovery, then I think it's not very stabilized. In this case, even though it get back to 24 to 25,000 level, I would still not be convinced that it's the real bottom. Like I said in the last video, on the way down, every day there was a bad news. It was suspicious to me. On the way run up, every day there's good news. It's also suspicious to me that it really looks like a market manipulation to destroy all the people that goes long and then go short, both long squeeze and the short squeeze. So yeah, for now it doesn't look like a real bottom to me yet, because we can compare it to the bottom for COVID crash back here, March 2020. A lot of people compare this bottom with the COVID crash bottom and assume it's the same thing. So we can see back then, it was also a very, very fast and steep run down, right? But the recovery is much more mild. Let's draw from the top to bottom with the golden section. The rebound right away did not even reach the 61%, and it already had a slight pullback to confirm the higher highs and higher lows with a few weeks. So it would climb up like a staircase, right? Instead of the super steep V-shaped recovery right now, shooting all the way to 38%, right? So back then, if you remember, during the COVID crash at the bottom, there was no good news every day to push up the stock market. It was not needed. And I think it was the opposite. There was so many bad news every day, even after the bottom, to drive more dips along the way. Like, for example, the COVID getting worse in this and that region, the China and US tension getting worse and worse, the delisting threat from President Trump, the lock-in fraud issue, and the negative oil price, etc. Every time it created this kind of market dips with the bad news, it was kind of a way for the institutions, the big dogs, to get the cheap shares out of the retail investors. So when the stock market is at the bottom, when things are so cheap, the big dogs do not want good news. They want bad news so they can keep taking the shares from the innocent retail investors. So this is not what I'm seeing right now. Right now, what I'm seeing is a lot of good news coming out that try to make people more optimistic, more confident to recover from the broken market, the broken investors, give more hope. But back then, when it was at the bottom, everything is so cheap, right? So institutions would not want to fight with the cheap shares with anyone. So they don't want good news from media so often. So this is what's lacking right now for me and makes me feel less confident about this rebound. I saw some people comment and ask me why I have been less bullish on the Chinese stock than before, and even though they're seeing such a strong recovery and finally waited for the reversal to happen. Well, first of all, I don't know if this is a real reversal, and second, I don't know if this crash in the past few weeks had already fully priced in the potential threats, because I do see a lot of institutions selling out of Hong Kong and China because they're afraid or they're trying to avoid something worse to happen, like China getting Taiwan. And for this, I think it will happen, but I don't know when. This I have never doubt in my mind. I'm always convinced, strongly believe that China would do anything to get Taiwan, but I didn't know when. I heard the story that says presidency would try to get Taiwan before this fall, which is the point where it is to decide whether he should continue as the president. I don't know if it's the case. I didn't think it would do this much damage before, because I always thought this is between Taiwan and China. But after we have witnessed what's happened to the Russian stock market, then I think a lot of investors, including myself, have realized that this is not between two countries. It's not between Russia and Ukraine. It is involving a lot more parties in the world. I mean, we have seen all the decoupling, the sanction, the oil price, the supply chain, the capital fleeing. Everything is such a huge mess right now because of this. So I guess this is really preparing for the war between China and Taiwan to happen. And I am not sure if it has fully priced in the damage yet. Some people think the war between Russia and Ukraine is gonna pass very soon and everything would go back to normal. And me, myself, I think this is just the beginning of the separation of the world we are in, the power struggle between the East and the West, and this is completely new. Just like back in 2020, most people thought COVID is gonna be something that lasts for a few months, but little that we knew that it's gonna last for years. And for war and geopolitical issue, I think we need to prepare that it's not temporary. I mean, I've made peace with it, and instead of hoping it will be gone, I think it's better we hedge against this worst case scenario, right? It's for the world to be more and more decoupling, deglobalization. So instead of hoping, I think we can look out for more of the opportunities that has something to do with the decoupling, which I also covered in my videos in the past. For example, last year in March, I remember someone asked me what's my favorite stock that is not Chinese. And I suggested MP material, right? During the March correction, it was somewhere between 30 to 35, and today it just broke the all-time high. This is, to me, it seems like the smart money is preparing for decoupling. So they strongly believe in the rare earth for US that would require less dependency on Chinese rare earth. Another example is DE. This is an agricultural stock, which I think would be a main trend to invest in. As more and more geopolitics going on, food will become more and more important issue. And you see, these few days keep making new high, all-time highs, even when the market is far away from making all-time high. So stock like this is really outperforming the market. Smart money seems to me are preparing for the worst and worst case scenario. Another example is Lockheed Martin, LMT. This is a weapon stock, right? I think everyone would expect it to peak on February 24th, right? You see, on this day, it had made a new 52-week high and started to dip. So from only this day's movement, it looks like people are selling the news when Russia and Ukraine war officially established. So you would think this is to sell the news, take profit, right? Because what's better chance to take profit when the news actually happen? Especially at that time, a lot of people thought Russia-Ukraine war would be a very quick war. But then, no, look at what happened after. It keeps breaking out, making new high. And right now, it's just consolidating at the top and doesn't seem like it wants to come back down to the ground. So this just tells us that the smart money has been establishing their position to prepare for more decoupling, deglobalization. So my suggestion is to keep an eye on this issue and look out for the investment opportunities for the future decoupling, more and more deglobalization. And to be specific for Chinese stocks, if I have to be very honest with you, right now I don't think the next Tencent, the next Alibaba, or the next 10 baggers would be exclusive for US listing like before. Because we know a lot of the US listed Chinese companies have grown a lot, gave good return in maybe the past 3 to 5 years if we don't consider the crash in the recent year, right? So if we don't look at this part, most of the Chinese stocks gave good return in the past, including Baba, PDD, JD, Bilibili, and Futu. If you don't look at the past 1 year performance, you can see over the past 3 to 5 years, a lot of them have given investors 10x, if not 20x. But if I have to be honest with you, I think the next 10 or 20x for Chinese stocks would not be listed in US exclusively, but rather within China. Because right now, all these, they call it BAT, Baidu, Alibaba, Tencent, or ATMXJ, including Meituan and JD. These are all internet companies like virtual economy. But I think for the next 10 to 20 years, China is gonna focus more on the other fields. Like, for example, the high-end manufacturing, the hardcore technology, they call it, something similar with what Germany had been doing for past decades. To give an example, CATL, which have given a 10x with the last 2 years, and even with the recent market crash, is still somewhere at the top. You can clearly see the difference. Companies like this is gonna be the next wave, the next generation of the Tencent, Alibaba, and Baidu, the next FANG for China. Another example is somewhat newer, smaller company, SenseTime, that is only listed in Hong Kong. So CATL is only listed in China and SenseTime is only listed in Hong Kong, but only because the US blacklisted it, which is perfect for China actually. Because I think this company has a lot of the potential to grow to be maybe the next Tencent. Focus on the AI technology. They might get a lot of big corps or government enterprise contract to help build the infrastructure. And you can see that the IPO price was somewhere around 3.9, right? And right now it's still almost 70 to 80% up from the IPO price, while most of the growth stocks have dropped below or way below the IPO price. Just look at Didi. That is one of the internet platforms. And even with the recent market crash in the HSI, has this dropped much? No. Still quite strong, holding the top. So you can clearly see the difference. So my point is, I think the next thing for China is not going to be exclusively listed in US. And this is very easy to understand. You're running a shopping mall, right? And you would want to attract someone like Costco or McDonald's, this kind of flagship stores, to attract more traffic to your shopping mall. So then people would also spend time and money on the other stores. So stock like this, SenseTime, CATL, I would consider them a flagship stock to attract the money from international market to move into the Chinese market and invest, and at the same time take a look at the other stocks. I don't know if this is the right analogy, but you should get what I mean. China is running the shopping malls, the Chinese stock market. They want to grow it. They want the flagship stocks to be listed within China. At the same time, they don't need to leak any sensitive information to the US, given the new PCAOB law. So either these companies that are foreign listed in US, they need to find a way to get listed within China, or they would lose a lot of the investment opportunity or the help of the government. And the major trend is that a lot of the international investors who believe in China, who still want to invest in China even after so much drama, would find a way to invest in these OTC listing or ADR or in China. Whether the international brokers would find ways to connect, or they would get more and more in touch with someone like Futu or Tiger, who may give them access to the China market, but not entirely yet, because Futu still doesn't have the license to trade in the A shares. Maybe in the future, but not now. So that is the macro trend I see. Now let's move on to some of the stocks, especially someone asked for NIO, because Baby NIO is reporting earning tonight. I haven't seen it yet, but right now NIO is looking quite strong. A very strong recovery from the bottom. Huge buy-in volume. You can see every day almost is green and large orders. Right now, in the past few days, it has pushed the 21 resistance, so the next target should be at 24 and 26. New support is at 20.8. Judging from the movement, I think the earning might not be bad, or the bad news has been digested. Maybe, because it seems like there are capital buying it up. Well, it's understandable because the price target has been met, because before I gave the price target to buy at 14 to 15 and it had met more than that, right? Now, next someone asked about Baidu. So from the look of it, I think out of all the Chinese stocks, Baidu is actually looking the strongest because it has been consolidating in this range from July to now, and this crash in the past was pretty hard, but it also had right away gotten back to the range of the consolidation. So right now the support is the bottom of the range around 132 and the resistance is around the top of the range around 162. Most likely I think it will trade within this range again. So I think this is one of the few stocks that can go back to this long-term trading range for now. Different than the other Chinese stocks, LKCL is moving a little bit different than the others because it did not reach a lower lows during this crash, and at the same time it did not have a strong rebound as the other ones, which makes sense because it didn't dip that much. So good thing is it's making higher lows, and bad thing is it doesn't have a strong momentum like the others. Not very strong volume following the Chinese stocks trend right now in the US, because everyone is kind of excited for the US listed Chinese stocks because as they have been running up quite high with such massive volume recently. So for now, LKCL has a support at 56 cents, which is very near 55 to 56. If this supports can hold, it can have a chance to run up following the other fellows, because usually the penny stock, the small caps, would be the last group to run up. After they run up, maybe the rebound is near the end. So maybe keep an eye on LKCL. It might have a chance to follow the run up. And in this case, first target is around 80 cents. Second target is around $1. Again, if the current support can hold it, next target is 80 cents and around $1. Okay? So again, if you have any questions regarding other stocks, you can leave me comments. That's it for today, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.